In recent months, we've seen publicly traded companies buying billions in Ethereum. One of the biggest has been Bitmine, and it has attracted attention from both bulls and bears alike. Recently, some of the bears did a deep dive into this controversial Ethereum Treasury company, and they found information that could tank its price, and potentially ETH too. And that's why today we're breaking this report down for you in simple terms, and telling you what it can mean for Bitmine's stock and ETH's price. My name is Lewis, stay tuned. Now, before we get started, nothing in this video is financial advice. It's for educational purposes only, and is intended to inform you about the recent reports about Bitmine. If you find content like this helpful, then smash that like button because it really helps us out. Now, with that said, the report we'll be summarizing for you today is titled, quote, Bitmine Immersion Technologies Inc., BMNR, DAT Ain't No Strategy. It was published by an investment firm called Carryside Capital, and we'll leave a link to the full report in the description if you're interested. Now, as some of you will know, the report isn't exactly positive. The opening line reads, quote, we are short shares of Bitmine Immersion, BMNR, an $18 billion Ethereum-focused digital asset treasury, or DAT, chasing a model that's on its way to extinction. Safe to say they're not fans then. The report explains that Bitmine was originally a Bitcoin miner, hence the name. However, the report notes that in 2024, its mining operations brought in only $3.3 million in revenue and had a negative EBITDA. That's earnings before interest, taxes, depreciation, and amortization for anyone wondering. In mid-2025, Bitmine abandoned Bitcoin mining entirely and began hoarding ETH and ETH equivalent assets to become an Ethereum Treasury company. That's when it executed a 20-to-1 reverse stock split, basically condensing 20 shares into one, before listing on the New York Stock Exchange and closing a $250 million private placement in public equity, or PIPE. The frontman of Bitmine's pivot has been Fundstrat's Tom Lee, Bitmine's executive chairman. Naturally, MicroStrategy bets on Ethereum as the settlement layer for the future of finance, expecting ETH to accrue value as it unfolds. The report highlights that the Genius Act in July and Trump's executive order from August, which allows retirement accounts to invest in alternative assets like crypto, have strongly supported Bitmine's thesis and bolstered its case for ETH as a strategic reserve asset. Here's where it gets interesting, though. The report notes that Bitmine's pivot to Ethereum, quote, unfolded at remarkable speed, but at considerable cost to shareholders. For reference, the company has grown from nearly 0 ETH to a staggering 2.8 million ETH since July, making it the world's largest Ethereum treasury company in just a few weeks' time. The report reveals that to fund its rapid ETH accumulation, Bitmine raised over $10 billion by issuing 240 million shares through an at-the-market, or ATM, program, with the potential to raise another $14 billion in the future. When you combine this massive ATM issuance with other offerings in the future and the potential for people to claim stocks at a certain price point through warrants, you realize that Bitmine's BMNR stock could be quickly diluted, and that could push its price lower. The report's authors emphasize that their bearish stance isn't against Ethereum itself, but against Bitmine's stock, given these dynamics. Even so, any issues around Bitmine could create issues for ETH. Conversely, Bitmine's continued acquisition of ETH could be a net benefit. No matter how you slice it, Ethereum treasury companies are going to create serious volatility for ETH. And if you're looking to trade ETH, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. All you need to do right now is just hit that link in the description or scan this QR code. Once you get on the deals page, you'll see all of our offers across a range of exchange partners. Click one of the Sign Up Now buttons, and that should take you right to the deal. These deals won't be around forever, though, so take advantage of them while you still can using the link in the description below or by scanning the QR code on the screen. Now, the next part of the report examines how Bitmine is following the same strategy as nearly every other digital asset treasury company, or DATCO for short. Most DATCos have basically just been copying Michael Saylor's MicroStrategy, now just Strategy. The playbook is simple: sell stock at a premium, use the proceeds to buy more crypto, and repeat. This helps DATCos grow their token per share count, which is key for attracting investors. The more tokens per share, the better. Bitmine's strategy consists of 5 key steps: issue stock at a premium to ETH per share value, use equity-linked structures to exploit volatility, reinvest part of the operating cash flow into ETH, earn staking rewards, and acquire DATs that have failed or fallen into negative MNAV. Now, for anyone confused, MNAV stands for multiple of net asset value and shows how the market values a company relative to its underlying asset. An MNAV above 1x is positive, indicating investors believe the portfolio is worth more than its assets, often due to confidence in management, strategy, or growth potential. This attracts investors and lets the company raise funds by issuing stock above the value of its underlying tokens. The excess proceeds are then used to buy more crypto, reinforcing the company's reserves, a strategy used by nearly every DATCo out there. Conversely, an MNAV below 1x signals fading confidence, making the stock less attractive. As such, the company may struggle to find new investors and won't be able to raise funds in the way I just mentioned. In any case, this crypto treasury playbook was pioneered by Strategy. There's just one problem, though. It may have worked for Strategy in the early days when TradeFi access to crypto was scarce and hype kept Strategy's MSTR stock at a premium, but that's no longer the case today. In fact, even Strategy is feeling the pressure. The report notes that its MNAV had dropped from 2.5x to 1.4x in recent months. In fact, as I record this, it sits at just 1.2x, a decline of over 50%. This decline is largely due to the proliferation of competing treasury companies and Strategy's changing, strategy. To bring you up to speed, MicroStrategy abandoned its pledge to issue shares only when the MNAV exceeds 2.5x, and has essentially been issuing shares when it wants. This strategy could pay off long-term, but lowering or removing the MNAV bar has understandably worried many MSTR investors. Strategy's declining MNAV has even sparked debate over whether the entire DAT landscape could be in a death spiral. And for context, this death spiral refers to bearish conditions eroding a company's MNAV, just as sizable debt maturities become due. Basically, as a crypto's price falls, the MNAV premium disappears, making refinancing nearly impossible. Then, when the debts mature, margin calls force the company to sell some or all of its holdings. These sales push prices down, triggering a chain reaction that forces other DATCos to liquidate, continuing until every DATCo is essentially wiped out. And since Strategy is by far the largest DATCo, these fears have rippled across the entire sector. Many MNAVs have taken a hit, even as their underlying assets have rallied in recent months. In fact, the report notes that investors are now, quote, so skeptical of the model that even routine PIPE registration statements have recently caused DAT shares to plummet, reflecting dilution and impending share sale concern. Even newer Ethereum treasury companies like SharpLink Gaming and ETHzilla have already seen their MNAVs fall below 1x, with both resorting to share buybacks to try and prop up their premiums. Meanwhile, Blockchain Technology Consensus Solutions, another Ethereum-focused company, has turned to what the report calls gimmicks, including dividend and loyalty payment programs designed to generate investor excitement. In any case, the key takeaway is that MNAVs are hypersensitive to change. They depend on investor trust, efficient capital allocation, and crucially, the scarcity of alternative crypto investment vehicles. And this ties to the next part of the report, which focuses on the evolving crypto treasury landscape. When Saylor made his first $250 million purchase of BTC back in August of 2020, there were few alternatives for BTC exposure beyond buying and holding it directly. This scarcity made MicroStrategy unique, and Saylor's strong support of Bitcoin turned MSTR into a meme stock, according to the report. Investors accepted the share dilution as long as the BTC per share count continued to rise. Fast forward to today, though, and that scarcity is gone. The market is now flooded with hundreds of crypto treasury companies, each trying to claim a share of the action. To put things into perspective, there are now around 200 treasuries for Bitcoin and roughly 70 for Ethereum. These DATCos also face competition from other investment vehicles offering exposure to assets like Ethereum, namely spot Ethereum ETFs. These provide cheap, liquid access to ETH, with some also offering features like leverage and ETH staking. What's more is that the tsunami of altcoin ETFs could hit the market soon. That's because in mid-September, the SEC introduced pre-approved generic listing standards for exchange-traded products, reducing the typical approval window from 240 days to 60 to 75 days. Many of the pending ETF applications are expected to be approved in October, although the current US government shutdown may put paid to that if it continues. Meanwhile, new filings are pouring in and could also gain quick approval once the government reopens. In short, investors seeking crypto exposure will soon be spoiled for choice. And if you're wondering whether altcoin ETFs could drain liquidity from their Treasury counterparts, then you could find out more about that in our recent video right over here. The point, though, is that every ETF that's filed and approved, especially those for Ethereum, deals another blow to the more speculative DATCos like Bitmine, making it increasingly difficult for the company to sustain its MNAV premium. To make matters worse, Bitmine lacks what MicroStrategy had in its prime, a viral figurehead. Yes, Tom Lee has built significant recognition as executive chairman, but to be blunt, he's no Michael Saylor. He doesn't command an army of die-hard fans calling him saint, nor can he issue billions in new shares without sending investors running for the hills. As the report explains, quote, a strategy built on reflexivity needs scarcity, charisma, and presumably something more innovative beyond massive ATM issuance to keep the flywheel spinning. Bitmine offers none of these. The next section of the report shifts focus from the broader crypto treasury landscape and highlights concerns around Bitmine specifically, especially regarding transparency. The report notes that after Bitmine pivoted from Bitcoin mining to an Ethereum treasury company, its initial round of PIPE and ATM raises helped its ETH per share ratio to more than double, jumping from 2.7 ETH per 1,000 shares to over 7 ETH per 1,000 shares by mid-August. This rapid growth was highlighted by Pantera Capital, a leading crypto VC fund who said that this growth, quote, exemplifies a company with a clear strategic roadmap and the leadership to execute it. Notably, Bitmine was also the first investment of Pantera's DAT fund. Make of that what you will. In any case, the initial momentum behind Bitmine's ETH per share count quickly slowed down despite the company's ETH holdings moving up and to the right. Between August 25th and October 6th, Bitmine's ETH stash grew by 65%, from 1.7 million ETH to 2.8 million ETH. And yet, its ETH per share only grew by 17%. Meanwhile, its MNAV collapsed from over 2x in August to just 1.2x only a month later. That's quite the fall, although for what it's worth, this has since risen slightly to 1.4x at the time of shooting. But here's where things start to become opaque. Most DATCos release regular updates about their ETH holdings, and Bitmine is no exception, with its near-weekly press releases. These press releases would sometimes include the company's NAV per share and the fully diluted share count. However, the last time Bitmine disclosed this info was in their August 25th press release, and since then, they've quietly stopped reporting it. The press releases published since then only include half the story: total ETH holdings, total dollar holdings, and any unencumbered cash. Now, to be fair, the report calls NAV per share updates periodic, so they could appear at any time. Still, since it's been over a month without any new data, the lack of disclosure naturally raises some eyebrows. The report points out the timing of the change as a telling sign. Quote, as per share accretion slowed, the very metrics that had been celebrated as proof of progress disappeared. And unlike many DATs with clear dashboards for tracking this data, Bitmine doesn't offer the same tools. Kinda crazy considering that Bitmine is the largest Ethereum treasury company out there. The report adds that if you look at Bitmine's recent announcements on X, you'll see lots of replies asking to see the missing details, like the share count, the ETH per share, and the current MNAV. Put simply, many are left guessing whether Bitmine is truly growing as it claims to be, or if progress is actually more stagnant than it seems. Regardless, the sheer fact that this information has quietly been dropped just as momentum has slowed is a huge red flag, especially for a company relying so heavily on compounding ETH per share growth and the trust of investors. Now, because the details we just covered haven't been made readily accessible, the report's authors have instead sourced this info themselves to try to reconstruct Bitmine's ETH per share on their own. Credit where credit's due. That's some dedication right there. The way they did this was by digging through the company's most recent SEC filings, then combining that with the weekly disclosures to infer how many shares would have been issued through an ATM. And once you hear the results, it quickly becomes apparent why Bitmine might have wanted to keep this information under the radar. The report notes that Bitmine has relied heavily on its ATM program since July, issuing roughly 240 million shares of BMNR to raise more than $10 billion to accumulate ETH. That works out to roughly 170 million every single trading day. By doing this, Bitmine has basically shot itself in the foot. As the NAV premium falls and shares continue to dilute, Bitmine is forced to deploy progressively larger increments of capital to maintain its ETH per share count. As such, every time ETH rallies, this should probably be seen as a precursor to more share dilution, rather than any company growth. To highlight this catch-22 situation, the report highlights a $365 million direct offering made on September 19th. This is where things get really opaque and really confusing, so listen close. With little trading activity for its ATM program, Bitmine needed to raise cash quickly without triggering a sell-off of shares. So it unveiled a deal that masked its dilutive effect. At $70 a pop, these newly issued shares appeared to be at a 14% premium to the previous close of $61.29. But as always, the devil was in the details. For each share sold, investors were given 2 warrants, granting the right to buy 10.4 million additional shares later at $87.50. Now for the confusing part. When you apply a standard formula called the Black-Scholes valuation, you can estimate what this right to buy stock should be worth based on math. We'll skip the nitty-gritty, but you're welcome to dive into the full report for the details. The outcome, though, is that instead of being worth $70 each, the share's real economic value was around $42, meaning what was disguised as a 14% premium was actually 31%. The report speculates that, quote, management would likely defend the inclusion of OTM warrants as harmless unless exercised, with new shares only coming in at a higher accretive level, but in reality, the warrants immediately siphoned value from common shareholders. Ultimately, this proved that Bitmine couldn't raise capital cleanly, and just 3 days after the announcement, BMNR plummeted 15%, more than double ETH's fall of 7%, wiping out its brief MNAV uptick. And to make matters worse, Bitmine's SEC filing showed the entire raise came from a single institutional investor. Hardly screams strong institutional interest, does it? And that wraps up this report, which we'll remind you can be found linked in the description. For now, though, the question is, what does this mean for Ethereum and the broader crypto market? Well, let's start with the obvious. If this report has made one thing clear, is that Bitmine is in big trouble. The problem, though, is that Bitmine isn't just another Ethereum Treasury company. It's the largest Ethereum DAT and the second largest DAT overall, behind only Strategy. So, if a company of this size were to falter, it could trigger major ripple effects across the entire DAT landscape, be they for ETH, BTC, or altcoins. To add to Bitmine's challenges, it now faces serious competition from Ethereum ETFs, which arguably provide investors with a better way to access ETH, and ETH staking rewards. The caveat, though, is that ETFs could also draw more eyes to Treasury companies, potentially benefiting them. And remember, you can learn more about that in the video right over here. Realistically, though, Bitmine is likely to struggle against Ethereum ETFs. This will likely hurt its MNAV premium and, in turn, drag down the MNAVs of other DATCos too. Some would say that this effect is already underway. What's deeply concerning, though, is that this effect can also be seen in Strategy, widely regarded as the most important DATCo out there. Its MNAV has already dropped to around 1.2x and could be heading toward a 1x, with the risk of dipping even lower. If that happens, it would signal that the entire DAT model may be fundamentally unsustainable. And if that were to happen, we could see these treasury companies being forced to sell their crypto, even BTC. This might sound extreme until you consider how influential Strategy and Saylor himself are to Bitcoin. I know you don't want to hear it, but eventually BTC's rally will run out of steam. And if Saylor's company starts to stumble, that could pose a big risk to Bitcoin. Before you get upset though, just remember that all of these problems are theoretical until they become real. MicroStrategy has already survived one crypto bear market, and it's possible that Bitmine will survive the next one too. So long as the largest crypto treasury companies don't go under, the systemic risk is pretty low. Just remember though that this risk does exist, and it's very real. Okay, so if you want to learn more about the corporate accumulation of Bitcoin, then you can check out that video right over here. And if you want to see why this could be crypto's final pump, well, check that video out right over here. Thank you so much for watching, and I'll see you again before you know it. It's Lewis, signing off.